Hey soldiers, we got another company out there trying to address home affordability or the lack thereof with a 1% down home mortgage. Now, all that glitters ain't gold. There are pros and cons to everything. Everything has a trade-off. So you're going to have to stick with me for just a few minutes in order to find out what these challenges are and why this may sound better than it actually is. All right. But let's get started, guys. Zillow. Okay. Zillow extends Lifeline. New down payment aid targets struggling home buyers. Why are home buyers struggling? Well, you know why. On Thursday, Freddie Mac's average rate on a 30-year fixed mortgage topped 7.09%, the highest since 2002. So it's 2 decades and we haven't seen mortgage rates like this. Now, a lot of people believe that mortgage rates like this are just total unicorn. Where did this come from? We've gone through a generation of low mortgage rates, relatively speaking. And a lot of these new buyers are being introduced to something that they heretofore did not think was possible. But if you go back into the 80s, you'll find that mortgage rates were approaching 20%. Houses were still selling, by the way. And also, hang with me, because at the end, I'm going to tell you why, although these interest rates are rising, why that may not be the end of your home ownership aspirations, and something that if more people understood could, lift the housing market, other things, being equal. But we've got 7.09% interest rates. These are the highest, like I said, in 2 decades. On the day Zillow Home Loans, on the same day that information was published, Zillow Home Loans published a press release about its new 1% down payment program to allow eligible home buyers to pay as little as 1% down on their next home purchase. A lot of people about, oh, wait, great. I don't need 20%. Excellent. Hold on. This program can reduce the time needed to save for a down payment and provide another option for those who are otherwise ready to take on a mortgage payment. This, according to Zillow, adding that the new program will first be available for Arizona properties with nationwide expansion soon thereafter. All right, Zillow says with the 1% down payment program, borrowers who qualify can now save just 1% to cover their portion of the down payment. And Zillow Home Loans will contribute an additional 2% at closing. The 1% down payment program can reduce the time eligible home buyers need to save and open home ownership to those who are otherwise ready to take on a mortgage. Now, why are these companies doing this? Well, because they don't want to see lending dry up. It behooves them to have people say, yeah, well, I still need to get in that home. Because if you're a bank, if you're a mortgage company, unless mortgages transact, you don't make money. So they have come to market with solutions to get people to get mortgages. Now, whether or not these solutions are actually going to benefit people financially remains to be seen. Zillow aims to lower the down payment barrier and increase activity in the frozen housing market. The highest 30-year fixed mortgage rate since 2002 has sent mortgage applications to the lowest level since 1995. I was still in college. Or was I? I might have just gotten out. No, I was still in college. For those who can afford higher rent payments but have been held back by upfront costs associated with home ownership, down payment assistance can help to lower the barrier to entry and make the dream of owning a home a reality. All right, sure. You can get in there. That dream may, in fact, turn into a bit of a nightmare when all of the realities start to hit you, not just, Zillow pumping it up so they can get some extra, revenue in the coffers. But look, the reality is that a lower down payment certainly could give you the flexibility to get into a home. Okay. spending less on the down payment is going to free up funds for, other items, especially related to you getting in the house. They could include repairs, closing costs, things like that. And once you move in, you're going to most likely need money for repairs, improvements, furniture, and maintenance. Little things. I remember when I first moved out on my own, I didn't have a can opener. I had a lot of tuna fish because that's all I could afford in the can. I was like, wait a minute, how the hell do I open this? So a lawnmower, if you've lived in an apartment, for example, you're going to need lawn equipment unless you are going to hire that out. That's an expense, right? All right, so those are positives, but the negatives are pretty weighty, all right? Let's go over the cons. If your down payment is lower, then necessarily your monthly note is going to be higher than it would have been if you would put more down on the mortgage, right? It's just like anything else. You put zero down on a car, of course, your monthly payment is now going to include that entire cost, right? If you don't have any money down. You'll also be paying more interest over the life of the loan, which could add hundreds of thousands of dollars to the original price tag. So when you sit down with that Zillow person or mortgage agent, you really need to delve into the math, because if you're going to end up paying more interest, a higher monthly payment, that higher monthly payment can really do a number on your cash flow, okay? Then over the long term with that interest, are you willing to put tens, maybe hundreds of thousands of dollars into a home if the appreciation on the value of their home is not going to keep pace or beat that amount of increased interest that you're paying? I don't know. You will probably pay a higher interest rate with a lower down payment, since the lenders are assuming more risk. So we talked about the prevailing interest rate is over 7%. Maybe you're looking at 7.5%, maybe 8%. Who knows? You will also be required to pay mortgage insurance, known as MI or PMI. This offers the lender some protection against loss in the event you default on the loan. Now, you can cancel that. You can get rid of the PMI once you reach 20% equity. In most cases, of course, you're going to need to check with your mortgage service provider, okay, for your specific situation. Now, here's the biggie. You could end up in a situation where you've got what's called negative equity. In other words, if real estate prices drop and because you didn't put a lot of money down, your house is worth less than what you owe on it. Now, over the course, if you're looking at this purchase as strictly a home for the next 30 years, okay, at least, then there will be fluctuations in value. You're not supposed to sit up there and I don't know if any place you can hit refresh on the value of your home, all right? There will be fluctuations over time. But where this really comes into big time importance is if you need to sell that home. And if you are someone who maybe you're not tied to an area, or you have the type of job where you think they may relocate you, you could be in a pickle, because what are you going to do? Are you going to sell it for a loss? Maybe. Are you going to rent it? That's a whole new, can of worms you might open with that. When you owe more on the house than it is worth, that's called being underwater, which can hurt your chances for qualifying for a home loan down the road, or even getting equity. You can't get equity out if you owe more on it than it's worth. Unfortunately, being underwater can occur no matter how much you put down. That is certainly true. But when you're at 1%, you're in Las Vegas at that point. Not being able to sell your home for at least what you owe is a huge risk that could set you back significantly, to say the least. So, look, they've got the product. We're seeing this happen more and more. Companies offering different ways for folk to buy homes, try to keep this housing market going, because the interest rates are making it very challenging for people. Now, Rocket Mortgage, that's another company. We did a profile on them. Check it out here. That's another company that has a 1% down mortgage product that they recently introduced. So we're seeing this become more prominent as interest rates increase. Check it out, guys. I'll talk to you soon.